So, what are we planning to do for this two sessions that we're going to have? That's my first, understanding that I wanted to give you, so that you will get an idea what you can expect from this session. The sessions are going to be like 2 hours today and then 2 hours tomorrow, so we cannot definitely cover the entire topic in 4 hours of discussion. So since I know most of you guys have given that feedback that you wanted the classes to be discussing questions because it's very close to the examination, and that's where you can actually get maximum rewards. So I decided that okay, let's go through maximum number of questions that we can discuss. So what I have taken up for the 2 days of session is that we will discuss RTPs and considerable number of questions are there on RTPs itself. So we will go from the latest to the past. Okay, so from May 22 RTP onwards, we'll go back and then start discussing. We will discuss questions and answers. That's what we are going to do. And what additionally I can do is that when there is a question being discussed, from an RTP, I can go back to notes and then discuss the concepts. But you know that some concepts could take a larger number of time to explain, so we will try to see concisely what concept we need to elaborate and what need not to be elaborated and things like that. From May 22 onwards we'll go back. Okay, so I've taken and I've downloaded like RTPs uh, since November 19 onwards, just hoping that we'll be getting a lot of time to discuss and we'll be very quick on, and all of you guys will answer and all that. That after that we can look at past exam questions and MTPs, depending on how much time that is left out. There has been amendments. If you're somebody who has studied for the last attempt, that means you've studied for November 21 examination, and you have not looked into the amendments, I'll strongly recommend you to go to my YouTube channel, and there is a free video that is uploaded which covers only the amendments that is applicable for this exam. And RTPs are generally the material which discusses the amendments. So the percentile of questions that can be repeated from RTP to the examinations are about 10 percentage. That means in GST, if you look at the structure, about one or two questions max, that's what will come from RTPs directly. And the latest RTP becomes the most important one. So last two RTPs is what generally everybody has to refer without a doubt. And then past examination questions, we can pick up those bigger questions wherein you will get overall understanding on how to answer few of the questions. I can also do one more thing. I can give you the notes. I have a chart notes that I don't know how many of you have already attended my classes in terms of GST. If you have attended, then you would have already been having my chart notes with you, but I can share that with all the students who are attending classes here. Okay, so that's an additional thing that I can do for you to refer back. The first thing first, I'm going to upload all the materials that I wanted to share with you and on the chat box. You can download that and then keep. No. So first, our discussion would start from ARTP. So I'm going to just share ARTP. You can get it always from ICAI website, but then I'm just going to share it out here. Okay, so I hope you guys are able to download these notes. Yeah, so let's get started with our question solving. All the questions that you will find across in RTPs are new questions, which means that it is either covering up some portion of amendments or it is trying to test you with some new portions that is available. Yeah, let's go ahead and then do that. Before I jump on to the questions, I'll also give you an idea on how the questions would look like. Yeah. So in GST, what are the type of questions that you have, and how do you structure the whole GST paper? Yeah. You know that GST paper, which is paper 4, comes for 40 marks, and in paper 4 you have direct taxes, which is income tax, which is asked for 60 marks, right? So this 40 marks paper and the 60 marks paper will have two separate question papers itself, and you do have two separate answer sheet being given in the examination. So you have to separately write, but the timing that is being available to you is common. So there is a common mistake that the students does in the examination, that they'll try to take a little extra time for one of these papers, and the other gets affected because of that. And income tax is a large subject, so generally it is advised for you to go ahead and then appear in GST paper, but you can decide that in the cool off time. Look at the questions, which one do you have more number of familiar questions, start with that, but always have in your head a timing that you need to give. So for GST paper, max out you can give 1 hour 15 minutes, so you have to finish including MCQ the entire GST paper in 1 hour 15 minutes. That requires a bit of practice that you have to have. So ensure that when you're preparing for GST, have that little bit of practice on the type of questions that you have to solve. So what are the type of questions that you can have in GST? Since our discussions are to be on questions, I'm trying to give you an overall runaway on the question types. Of course, you have MCQ, which comes like a case study MCQ, wherein they'll ask you 5 questions after the case study. So why they do case studies? Just purely because they wanted to waste your time. They'll make you read a large paragraph, and generally, when it is a main examination, you're a bit tensed about the examination, so you tend to go and read the examination case study twice. So that takes a lot of time. So that's all they wanted to do. They want to waste your time. And generally, out of 5 questions, which are of 2 marks each, 3 questions are numerical. They'll make you compute something, or they'll make you do a check on some concept and then answer that particular question. And beyond that, 2 questions are generally direct. So what you can best do is that just look at the sub MCQ questions first. On the first read, look at the MCQ questions first, and then come back on reading the paragraph once again. So if you're reading it once, read the paragraph, read the questions, then go back to the paragraph once again. So don't do read the paragraph twice and then come to the question, because some questions could be direct, and when you're reading that particular paragraph, you should be able to understand what answer that you need to look at. So if you want, you can just quickly read that 5 MCQs and then go back to that paragraph and then read. That's also something that you have to plan. Plus, you will have another MCQ which would make it 12 marks, which is just an OMR filling. Then you have question number 1, compulsory question, which is generally a numerical question, which is for 8 marks. From question 2 to 4, which is 3 questions, which are for 10 marks each, out of which you can attempt any 2. That makes it 28 plus 12, that makes it 40. Okay, out of this, the third question, question number 4, will have sub question wherein you will get a theory question. This is how generally that question structure works. That will be a theory question. Here they'll give you 2 options, and this last question, so every question that you have from question 2 to 4 is of 10 marks, but there is a split of either 5 plus 5, it could be 4 plus 3 plus 3. So this could be having again sub questions. And if you're choosing the fourth question in one of these sub questions which are of 4 marks, you will have 2 options again to pick from. And from the past examination question, you can understand that that comes from that procedural chapter. So what's the relevance of this discussion? Because you have questions which are optional in procedure chapter. So in your ABC analysis, where you should start with GST paper and then solve GST paper, Even if your procedural understanding is not extremely good, you can still be able to leave that particular question and attempt question 2 and 3, and then still able to score substantially good marks in the entire paper 4 from GST part itself. This is the understanding that you need to keep. You can have direct theory question, which is that I have said as question number 4b. Generally direct theory question it is. And apart from that, you have practical theory question, which can be coming from any chapter, literally any chapter, which is a scenario based question where you have to write the concept first and then answer it based on the concept. So you have a scenario that is given, and when we discuss a lot of question today, you will be able to understand that there are a lot of practical theory question even in on the RTPs as well. Then you have numerical questions. I'll just list down what are the type of numerical question that comes in GST. The most popular numerical question and most the easiest of the lot would be generally a computation of net GST payable. So my my agenda would be that at least by tomorrow, and we should be able to at least look at one question in each of this category. Okay, so net GST. So sometimes this question is also called as minimum GST computation. Then you have another type of question called as taxable value. Okay, so what is the compute the taxable value? So when you look at net GST question, this question generally comes from chapters like value, ITC, exemption, charge. These chapters are generally mixed into one big question. This could even be an 8-mark question. This could even be a 5-mark question, depends on. Taxable value question also generally has, it could be even just from section 15 alone, from value it can be. It can even include some portion of exemption in computing taxable value. It can even have reverse charge mechanism inside. Then you have eligible ITC question, which would only be including ITC. There also you can get questions wherein blocked credit are being separately tested. You have time of supply question, computation, what is the time of supply. In ITC itself, you can have ITC reversal question. Again, I don't mean rule 40 to 43, which are actually omitted in your examination for intermediate. Now we don't have apportionment question. ITC reversal generally question comes on capital goods. So after reducing 5 percentage for per quarter, or tax on second hand value, whichever is higher needs to be reversed. That question is generally is being asked. It's section 18.6 type of question. Now you have now questions on registration chapter, which also on composition levy scheme, which is generally aggregate turnover based question. So these are precisely the type of numerical question that is being tested in your GST paper. So you have to be aware, okay, what type of question is being asked when you read a question itself. Then you have a large array of practical theory question that can be coming from procedural chapter. But if you even if you don't look at the entire topic, even if you look at only the questions that you have from ICAI side, that itself would cover most of the question. Now with this introduction, let us go to May 22 RTP and then try to solve these questions, and then wherever the concept needs to be discussed, I'll discuss that as well. Okay, let's look at this. So every RTP generally goes with MCQ questions first, and then some amendment based questions. That's how that RTP is there, and answers are also being given. Some of the answers, what happens is that when ICAI gives the answers, they generally go ahead and then give the answers with all section numbers, circular number, notification number. But what you need to understand is they are just copy pasting from what is there. But then that is not the correct method. You can always have a stringed answer or a concept based answer, which would be much easier to write compared to what is there in the RTP answers. You don't have to really put it in the same order. But anyway, we will try to understand what is the correct method and what's not the correct method. Okay, let's get started with. You should be able to read it with me and then try to give it an understanding. So as and when I read, I'll try to underline which are the important areas that is required. Vidhula Impex Limited. So it's a case study MCQ question. So this is what will come for 10 marks. So after this case study, there will be 5 MCQ questions, which are reasonably simple generally. So in the examination, there could be 1 or 2 MCQs which could be out of box. Vidhula Impex Limited is engaged in supplying sports goods. The company did not opt for registration under GST. The proper officer under GST, based on the inquiry, finds that the concern is liable for registration. The officer identified that he is liable for registration and he registers the firm on temporary basis. So they're talking about temporary registration. So the concept that is there is that the if the person who is liable for registration does not register and the officer identifies, officer can actually give him a registration, which generally is called as temporary registration within 90 days. Then they'll have to go and apply for a original registration. This is what is the provision that we have relating to that. So in this case also says that Vidhula Impex Limited is no, and this is the first time that this kind of temporary registration question is being tested in an ICAI material. So it was not tested anywhere before in GST. So they're saying that there is temporary registration that was given by the officer on 15th of June. So within 90 days, this Vidhula Impex Limited should have actually gone and applied for registration from there. After being granted registration certificate, the company availed the following services. Availed, which means that they're talking about inward supplies. Following services for the purpose of its business. One is renting of motor vehicle from Blue Taxi Private Limited. Now let's try to fix the category of registration, category of constitution both of these people are having. Vidula Impex Limited it is limited. It's a public limited company, which means it's a body corporate. And renting of motor vehicle is also provided by a body corporate. So this is something that you have to remember. And GST charged is 12%. Okay. So when renting of motor vehicle is done by a body corporate to another body corporate, would it come under reverse charge mechanism is the first question that you need. No, it would not come. So when is reverse charge mechanism coming in? Reverse charge mechanism will come when a non-body corporate, when a non-body corporate not opted for 12%. Why should they offer 12%? Because they're going to get full ITC. They have not opted for 12%. They provide renting of motor vehicle, wherein motor vehicle is the one which is rented. Transportation of passenger is not the focus there. And cost of fuel is included in that particular transaction. And they provide services to a body corporate. A non-body corporate providing services to a body corporate. Here, the company itself is a body corporate and it is under 12%. So this will come under forward charge mechanism. So Vidhula Impex Limited would have paid taxes to them. Okay, this is one understanding that you need to keep in your head. Then they also appointed Mr. Rajesh as technical director for advisory role in business, and the payment was made based on contract entered. However, he was not an employee of the company. So he's not an employee, but he's a technical director for advisory role in the business, and the payment was made in contract ended. When a director, he's a director. So a director is providing services to a body corporate. What charges would come? It is reverse charge mechanism. What difference it would make when he's an employee? What if he's a managing director and an employee? He's a managing director and an employee, it would not be even considered to be a supply, because schedule 3 says that if there is a schedule 3 para 1 says that it is not a supply. Correct. Salary is not a supply. So here it's not salary, it is a contract payment and it will come under reverse charge. Then during the course of its business, the company issued an invoice to the customer and erroneously charged higher value by 34,000. So they have actually issued an invoice to a customer, but by mistake they charged 34,000 extra on the invoice. Okay. So they wanted to reduce the value in the invoice. What document will they issue? They'll issue a credit note. Correct. Then further, in the month of February 2021, the company also generated an e-way bill for interstate transport of goods. However, immediately on generation of e-waybill, the buyer cancelled the order before it's dispatched from the factory for delivery. So what happens is that they have generated the e-waybill. You cannot go ahead and then amend the e-waybill, but then if immediately you know that, okay, there's a time limit. There is a time limit of 1 day, 24 hours, wherein you can actually go ahead and then cancel your e-waybill. So in this particular case, they have generated the e-waybill, but they did not deliver this. They did not have this particular supply that is being made. They have cancelled that particular they've cancelled that particular dispatch. The buyer cancelled the order and they wanted to cancel this particular e-waybill. That is what they wanted to do. Next, in the month of March 2021, since the company was incurring heavy losses, it applied for cancellation of GST registration on 15th March. They have applied for cancellation on 15th March. Order of cancellation was was made on 30th of March, effecting cancelling the registration with effect from 15th March. So the date of cancellation is 15th March. But order of cancellation came on 30th March. So when they closed down their business because of heavy losses, they decided to close down their business. They are cancelling their registration. When they are cancelling their registration, what return they are required to file? What return? They need to file something called as final return. Correct. So they'll file something called as final return, GSTR 10. So what is the deadline for filing final returns? How much time would they get? They'll get 3 months of time. So GSTR 10, correct. 3 months of time is what they'll get for filing this particular final return. So the question to you is this: whenever it is cancellation, you need to understand one point, that whenever it is relating to cancellation, generally we have to take whichever is later. Okay, that's the only place wherein instead of taking whichever is earlier, whichever is later is coming. So from which date I have to compute this 3 months is the first question that you will have. So from which date I have to compute this particular 3 months? From date on which I have cancelled, or the order of cancellation, whichever is later. So what is the date on which I got cancelled? On 15th of March. My effective date of cancellation is 15th of March and my order came on 30th of March. So from which date I have to compute this? From 30th of March. Okay, so 30th of March, 3 months. So what will be the due date of going ahead and then filing final return? June 30 would be the last date on which I have to go and do the final return. So they can also have an additional question here. They asking for, once they get the order of cancellation, within how many days you have to do something called as a revocation of cancellation. But here it is not possible because the cancellation is applied by the registered person itself. It's a voluntary cancellation. That revocation is possible when it is a suo motu cancellation by the officer. Correct. So if the question can be modified in that order also. Okay. Okay, now let's look at the question. We have already discussed the paragraph in full. Now let's look at the question. What is that they're asking? From the following information provided above, choose the most appropriate answer for the following questions. After grant of temporary registration, Vidhula Impex Limited needs to apply for registration within 90 days from the grant of temporary registration. If extension period is to be granted, if there is no extension period is to be granted for that temporary registration. So that is the first answer. Second, in case of which of the following services company is liable to pay tax under reverse charge? First one, renting of motor vehicle. Would it come under reverse charge? No. Directorship services, would it come under reverse charge? Yes. So B is the correct answer there. Which document is required to be issued by the company in respect of invoices issued on 28th of February? So they said it was increased by 34,000. So I have to issue a credit note to reduce the value by 34,000. The company needs to file its final return within 3 months from the date of cancellation or order of cancellation, whichever is later. So which is the date that would come? I have to do it on 30th of June. Which of the following statement is correct in respect of e-waybill generated for goods in the month of February for which order was cancelled. Okay, so they can do it in 24 hours. Sixth question. Mr. Shambhu, a trader registered under GST in Delhi, is engaged in wholesale business of toys for kids. Mr. Nandi, registered under GST in Patiala, a regular return filer, supplies toys in bulk to Mr. Shambhu for selling to end consumers. Okay, so Shambhu is a trader registered under GST engaged in wholesale business of toys. Is registered under GST in Patiala, a regular taxpayer, and supplies toys to. So Nandi supply toys to Shambhu, and Shambhu is supplying toys to other people. Okay, so this is the category that we have. So Nandi will give the product to Shambhu. Shambhu will give the product to the customers. All right. Mr. Shambhu, paying tax under regular scheme, has not filed GSTR 3B for 2 tax periods. Okay. So Mr. Nandi wants to generate e-way bill for toys amounting to 5 lakh to be supplied to Mr. Shambhu. Also, Mr. Narayan from Jammu approached Mr. Shambhu for purchasing toys amounting to 75,000 for the purpose of return gift on his son's first birthday party. Shambhu wants to generate e-way bill in respect of outward supply to Mr. Narayan. Examine with reference to the provisions under GST law whether Mr. Nandi and Shambhu can generate e-way bill. This particular question is dealing with a latest amendment that is there in e-way bill rule. Okay. So there are two provisions that you need to understand here. One is that which are the cases where your e-way bill will be blocked. That is first understanding. Which are the cases where your e-way bill will be blocked. And second understanding that you need to have in this particular case is that if e-way bill is blocked, is it blocked for a supplier? Is it blocked even as a recipient? So this second part is the amendment that we had. So now before I address this particular question, I'll give you a quick glance at the provision so that it will be very easy for you to approach it. Okay, so this is the area wherein it is there in the notes that I've already shared with you, so you don't have to worry. You can glance through that later. So this is the provision that we have. They said following person shall not be. This is rule 138E, blocking of e-way bill facility. It says that following person shall not be allowed to generate e-way bill as a supplier in respect of outward supply in following cases. So there are 4 cases wherein your e-way bill facility would be blocked. Okay, but you also should understand if you give sufficient reason, there could be a sub question at some other question which says that they have sufficient reason to prove. Will that facility be opened up for them? That is also there. Okay, so for what are the reasons? So you have to just think about 2 tax period. That's generally where you will not be able to generate an e-way bill. So 2 tax period you did not file return. So what are the return? If you're a composition levy scheme person, you have not filed CMP 08 for 2 quarters. If you're a regular taxpayer not furnishing 3B for 2 tax period, or regular taxpayer who has not furnished GSTR 1 for 2 months or quarters. Okay. In all these cases, including a person whose registration has been suspended as per Rule 21A, in all these particular cases, what happens is that they will not be allowed to generate e-way bill. But earlier, this provision was that, say for example, I did not file GSTR 3B for 2 tax periods. Okay. If I have not filed GSTR 3B for 2 tax period, I will not be allowed to generate my e-way bill from the next day onwards. But what capacity? What if I am purchasing some product and the supplier of my product wants to generate an e-way bill and want to give my GST number as recipient's GST number? Will that be allowed? Or or wherever, like, it could be like, so there are three parties that is involved in an e-waybill: supplier, recipient, and transporter. So if any one of these GST numbers, if any one of these GST numbers, sharing the note once again. Okay. If any one of these GST number is blocked, will they be allowed to generate an e-waybill? So earlier provision was that if recipient or transporter or supplier, anyone's e-waybill facility is blocked, then there is no e-waybill that can be generated by them. Now this has been amended. They said, now if you are coming under 2 months, you did not submit your return, then you will not be allowed to go ahead and then generate e-waybill as a supplier. But if you're purchasing something, your e-way bill can still be generated. Okay, so the amendment is that earlier the blocked GSTN couldn't generate e-way bill in any capacity. Now it is amended to relax, and blocked GSTIN can be used for their e-way bill for their inward supply. So I can, if I did not file 3B for 2 months, I can still make purchases, no problem. That other person can still generate e-way bill. But when I make a sale, I will not be able to generate e-way bill. So my outward supply is what will not be, will not be going on after I not file return for 2 tax period. So let's go back to the question now so that we will have an idea. So in this particular case, what will be our answer? Now, Nandi and Shambhu are two registered persons. Now, who is not filed 3B for 2 tax period? Shambhu did not file 3B for 2 tax periods. Did not file. So, now can Nandi generate e-way bill to Shambhu? Yes, that will be allowed. Can Shambhu generate e-way bill to Mr. Narayan? So, Nandi is selling for 5 lakh. E-way bill is allowed. But Shambhu, when he is selling it to the customer for 75,000, is this e-way bill allowed? No, this e-way bill will be blocked under Rule 138E. Okay, next question. Next question, the answers in the material is a bit confusing. They have just taken the maximum rate and then given you an understanding, but bit more discussion can be done on that. I'll read the question. Again, this is also touching upon an amendment that has happened. Like I already told you, RTPs are generally an area wherein ICAI uses it to give you a little more practice on the amendment related questions. That's why there's a chance that one of it could be actually be repeated in your examination. So first one, question A. Mr. Ayushman, a registered person having intrastate aggregate turnover of 1.2 crores in the preceding financial year, did not file GSTR 3B for the month of September 2021 by 10th November. So let's assume that he has not opted for QRMP scheme, filing 3B on a, he has filed GSTR 3B on a monthly basis. Now, what is the deadline for filing GSTR 3B for a normal person? It's 20th of next month. So, September 3B needs to be filed on which date? 20th of October. Now, I'll have to look at, is this 3B a nil 3B or it's a 3B wherein I have some amount being filled? So, is there a, is it having some tax payable? Yes, it has some tax payable. So I did not file my taxes on time. I did not pay my taxes on time. So there are two consequences that I'll have for this. What are the two consequences that I'll have? Number one, if I'm making the payment late or delayed payment of taxes, I will have interest at the rate 18%. Not only that, I'm also filing my return delayed. I'll have late fee applicable for delayed filing of return. These are the two consequences I will have. Okay. Now, what is the delayed filing late fee? So late fee has been rationalized. The word that I have used in the latest amendment is that the late fee has been rationalized. Now they are now taking the late fee to a lower amount. They say, no, I don't want to charge maximum late fee and all that. I will, earlier the late fee was really, really high. 10,000 rupees was like the cap that they had given. It was really high. So now they said, okay, I understand because of this very high late fee, people are not really going ahead and then filing the returns when that is late. So this would amount to no compliances or lesser compliances. A lot of people, if they miss 1 month or 2 months, they will end up not filing for next continuous months because there is a huge late fee if they start filing. So they'll close down the entire GST and then take a new GST in some other name. All of these things were going on. So they said we will rationalize. So in this question also, what I am going to do is that I'm going to go back to the provision and then give you a quick glance so that you can understand what has happened in this particular provision. What is the late fee that we have right now? Delayed filing of GSTR 1 or 3B. Now we are talking about 3B here. Both of them are having the same thing. Now one important point that you need to understand here is whenever the law talks about late fee, it can only talk in CGST Act or SGST Act or IGST Act, right? So when it is generally all the provisions are being discussed in CGST Act. So when I say there is a late fee that is applicable, and when there is an late fee applicable on the delayed filing of returns, the problem is that it will talk only about the late fee that is there in CGST, which means a late fee portion that needs to be paid to central government. At the same time, there is a portion of late fee that needs to be paid to state government also. So wherever they are giving a late fee, into two will be the actual late fee paid by the taxable person. So it should be double the amount, correct? So when you look at that, they have now said it will be depending upon your turnover in the preceding financial year. If you are a very small supplier, I don't want to bombard you with a very high late fee because you will end up not filing at all. And even if you have no outward supply, there is nil tax payable that you have, that might be the reason you did not have any operation for a month. So that might be the reason why you did not file any return. So if you are coming from that kind of a category, which we will call that return as nil return. So but in GST, even if you don't have any supply, you will still supposed to fill everything as nil and then file the returns. If you delay that also, if you delay filing of nil return also, there is a late fee applicable. And late fee, very similar to interest, is also on a per day basis. Late fee is also on a per day basis. That's one important point that you need to understand. So what you have to remember here is that as and when you delay for so many more number of days, you will have to pay late fee on each of the days of delay from the due date that you have. Okay. So let's try to understand this particular question in that order. So the late fee is if you delayed filing nil return of 3B or 1 from the due date, each day you will have to pay 10 rupees per day as late fee in CGST, which means that if you are filing nil return, your total per day late fee would be 20 rupees. So if you are delaying for 10 days, you will have to pay 20 into 10, so that is 200 rupees. But there is a maximum cap that is being given. So now they have said if you are filing nil return, your maximum cap is 250 rupees under CGST, which means under GST, the maximum cap is 500. So I have a lot of people commenting on the chat box that they have not got the notes. Just give me a second. I can give you a Google Drive link so that it will be easy for you to download it. Okay. So similarly, you have other late fee also based on your aggregate turnover. So the late fee would be if your turnover is less than 1.5 crores, then 1.5 crores to 5 crores, and then above 5 crores. One important point, all in this particular cases, your per day rate does not change. It is 25 per day, which means 50 per day. In both CGST and SGST put together, it will be 50 per day. So if you are supposed to file January 3B and you're supposed to file on February 20th, you did file on 25th, means there is 5 days of delay. So 5 days into 50 rupees, that is 250 rupees would be the late fee that you have to additionally pay. Are you understanding? This is the structure. But then the maximum late fee has been capped. So in case of aggregate turnover less than 1.5 crores, it is now 1000 under CGST, which means the maximum would be 2000. And then you will have this confusion. Okay, so there is CGST based late fee, there is SGST late fee. What about IGST late fee? There will be another one. No, CGST SGST, it is talking about late fee, hence late fee will not be there for IGST at all. Okay, so it will be only one full late fee. So half of it will go to central government, half of it will go to state government. So 2000 is your maximum that you can collect if your turnover is less than 1.5 crores. And if your turnover is between 1.5 crores to 5 crores, then 5000 is the maximum. If your aggregate turnover is above 5 crores, then rupees 10,000 will be the maximum. So irrespective of whether you make an interstate supply or intrastate supply, it is not based on whether you are having IGST payable or not. It does not go like that. Since late fee is already specified in CGST and SGST, late fee is not specified in IGST. That's the understanding that you need to have. Now let's go back to our question now so that you will have a better idea. Okay, now let's look at this particular question. So they're saying that their turnover is 1.2 crores. Now you guys tell me, it is 1.2 crores. Now you guys tell me what will be the maximum late fee that will be applicable for them? 1.2 1.2 crores, which is it is less than 1.5 crores. The maximum late fee, CGST, SGST put together would be 2000. Okay, will your answer be different if Mr. Ayushman has intrastate aggregate turnover of 5 crores in the preceding financial year? If it is 5 crores, the turnover, aggregate turnover is 5 crores. What will be the late fee that will be applicable? It will be 5,000. Up to 5 crores, it is 5,000. Okay. What if it's nil return? What will be the maximum late fee that they'll have to pay? 250 plus 250, which is 500. Correct. So here, the actual late fee is not this. It is just maximum late fee that we're talking about. Actual late fee, if it is nil return, it will be 20 per day. So how many days of delay we have? So it was supposed to be filed on 20th of October. It was actually filed on 10th of November. 10th of November. So which means that in October there is 11 days, in November it's 10 days. So 21 days of delay is there. Yeah. So 21 days into 50 rupees, which is 21 days into 50 is 1050 for this. And if it is 5 crores also, it will be 1050 only. But then the maximum is that. If it is nil return, 20 into 21 days, that is 420, right? This is the late fee that we have. And I think the question has been put out to think that it is 22, November 22, like a long delay. Okay, so the answer in your RTP talks only about the maximum late fee, does not talk about the actual late fee that is there. So just be careful about that. Okay, so now let's look at question number 8. Mr. X of Haryana intends to start business of supply of building materials to various construction sites in Haryana. He has taken voluntary registration under GST in the month of April. However, he has not commenced the business till December due to lack of working capital. The proper officer Kyomo to cancel the registration for Mr. X. You are required to examine whether the action taken by the proper officer is valid in law. Kyomo to cancellation. What are the occasions which somebody can do a Kyomo to cancellation? There are there are four reasons that's there in the law, and there were three more additions that happened later. But let's look at the four reasons that they can do a Kyomo to cancellation. So, what is the difference between voluntary cancellation and Kyomo to cancellation? Voluntary cancellation means I myself have taken GST registration. Then I go and then tell the officer, please cancel my registration. Okay. This is voluntary cancellation. Then what do you mean by Shiomoto cancellation? The officer cancels my registration because I would have done something wrong. That's why the officer comes and cancels my registration, right? There are four occasions for which the officer can cancel my registration. Which are the four occasions? One, they're not conducting business from the declared place. They are making invoices without supply. Anti-profiteering provision is there, like which means they are making profit out of GST provisions. Then second, they're not filing returns for a continuous 6 months period. Then they have not commenced business 6 months from the date of registration. Registration was obtained by the means of fraud, willful misstatement, suppression of fact. In this particular question, what's the reason why why he went for cancellation? He started his business. He obtained his registration in April. So he should have started his business within how many months? 6 months. When did he start the business? He did not start the business till December. No business till December. So 6 months he did not start. So the officer has the power to Siomo to cancel the registry. Then Mr. X has applied for revocation of cancellation. Now, if the officer cancels, what is that he will issue me? He will issue me a document called as shock cause notice. He will issue me a shock cause notice because the officer is cancelling my registration. I should be given an opportunity of being heard. So I get a shock cause notice and I can always reply for this shock cause notice. What if I don't reply for the shock cause notice? Then there will be a cancellation order that comes within next 30 days. So suppose I was not there in the town or something like that, so I could not reply for the notice, and I did not check my GST login, so I did not find this at all. So they cancelled my registration. Cancellation order came in. Now, after receiving the cancellation order, do I have any repercussions available with me? Do I have any solution available with me? I want to restore my registration. What will I do? You have something called as revocation of cancellation that is possible, which means that cancellation of cancellation. I go to the officer and say that, please, that was by mistake. I want to continue my GST registration. Can you do something? The officer says, no problem. You can make another application. What is that application called as? Revocation application can be made. But there is a time limit before which I have to actually make this revocation application. The time limit is 30 days from the order of cancellation. This was the only deadline that was there. Now, this deadline has been revised. How can I apply it for any number of time? No. Now you can apply for extension of this particular 30 days. So there are two layers of extension that I can apply for. Okay. So I can apply for another 30 days, which means that normally I'll get 30 days without any approval. I'll get 30 days within which I can apply for revocation. If I miss out that, another 30 days will be given by additional or joint commissioner. I can apply for additional joint commissioner and ask them to give me another 30 days. That makes it 60 days from the order of cancellation. Now I can take another 30 days time, but to whom I have to apply to? Have to apply to commissioner. So these are things that is there in the latest amendment. That's why the RTP question is trying to test on that. So let's look at this. What is that he has done? Mr. X has applied for revocation of cancellation of registration after 40 days from the date of service of the order of cancellation of registration. The department contends that the application for revocation of cancellation of registration can only be made within 30 days from the date of service of the order of the cancellation of registration. However, Mr. X contends that the period of submission of application may be extended on sufficient ground being shown. You are required to comment on the validity of contention raised by department and Mr. X. So Mr. X contention is correct. He can apply to additional joint commissioner and get another 30 days. He can even go to commissioner and get another 30 days. That makes it he can apply within 90 days of time. Okay. So that would be the answer for this. The answer is there in RTP. I don't want to take out the time that we have for discussing another question in discussing the answers. You can always look at the answer and then get better clarity. Let's look at the next one. Gita Services Limited. Next question, question number 9. Gita Services Limited, registered under GST, is engaged in providing various services to government. The company provides following information in respect of services provided during the month of April. So this is talking about services provided to government. Services provided to government in exemption discussion. Okay, so there are multiple services to government that is being discussed. So what I'll do is that I'll go back to the exemption area and then I'll tell you which are the services provided to government which are exempted. Now let's look at the exemption discussion that we have. Okay, so one thing is there right away. Okay, look at this. Services of training program to which expense is borne by government. So a third party is providing training program to government. Now there is an amendment here also which says that if 75% or more of the expenditure is borne by the government for a training program, and who provides, a third party is providing this training program to government, means it could be attended by some government employees or somebody else, but then the payment is actually made by the government. How much of the payment? At least 75%. Then that is exempted. Next, services by fair price shop. What is fair price shop? Ration shop basically. So the ration shops providing services to central government, state government, union territory for sale of food grains like kerosene, sugar, and because different product comes from different governments, and wherein their consideration is a margin. So the fair price shop charging a margin from the government for selling all this kerosene, sugar, food grains, rice, atta and all that. That is also exempted. Then next, services provided to government, local authority, governmental entity. There, exemption is available. Point number one, when it is pure labor contract, which means that I do not have any goods involved in it, then it is exempted. Pure labor contract is exempted. Second, composite supply is also exempted provided the value of goods is less than or equal to 25% for functions of panchayat and municipality under Constitution Article 243G, 243W. So any 243G, 243W activity of panchayat and municipality, if they decide to give it to a third party to do, say some maintenance, some building park, something. Now, if the party is only giving labor, it is anyway exempted. But if the third party is giving both goods and services, say for example, building a park, the labor and some materials, okay, some materials is also being, some steel is being supplied by the by the contractor itself. Now the total contract value is 1 crore, wherein the steel, the goods value is 10 lakhs and balance 90 lakhs is service value. That is a composite supply of goods and services. Will that 1 crore billed it to the government by the contractor, will that be exempted? The answer is yes, it will be exempted. Why it will be exempted? Because the value of goods is less than or equal to 25%. Okay, so it is 10 lakhs, so that will be exempted. Now, these are the points that we have. Now, this question is actually structured based on that. Now, let's go back and then try to understand this question. So, there are 4 services they have listed. We'll have to see which one is taxable and which one is not taxable. Gida Services Limited, registered under GST, is engaged in providing various services to government. The company provides information of that in the month of April. First one, supply of manpower, only manpower, labor, for cleanliness of roads not involving any supply of goods. They're exempted. It's a pure labor contract by a third party to the government. It is exempt. Okay. Second, services provided by Fair Price Shop, ration shop, owned by Gida Service Limited, by way of sale of sugar under public distribution system against a consideration in the form of commission or margin. They're exempt? Yes, this is also exempt. Third one, service of maintenance of street lights. Maintenance of street lights in municipal area involving replacement of defect lights and other spares along with maintenance. Generally, replacement of defect lights and other spares constitute 35% of supply of service. So, lights and spares, which means that the goods constitute 35% of the total supply of service. Is it exempt or taxable? It is taxable because the value of goods exceeds 25%. Right? So, it will be taxable. Then, the fourth one, service of brochure distribution provided under training program for which 70% of the total expenditure is borne by the government. Is it taxable or exempt? That's also taxable because how much percentage has to be borne by the government for it to get the exemption? It should be 75%. Correct. Has to be 75% or more. Here it's only 70%, so that will become taxable. So the first two is exempt and the third one is taxable. Third and the fourth one is taxable. Okay. Now the 10th question or the last question in May 22 RTP is a theory question which talks about 86B. They've not tested 86B at all because 86B is it's a end of doing business provision for a lot of people, which is very draconian provision that we had in GST. So I'll explain you that provision quickly also for your understanding. So to get you an overall understanding on what is 86B is. Very simple provision, but there are few exceptions for people who has to comply with 86. So I'll read the question for you first and then give you a quick understanding on what is that provision. And it's not an amendment which came in this time. It was an amendment that came in last time. Okay. So for November examination, it was an amendment, but there was no question asked on that particular amendment. But then now that we have a question in this RTP, then we will look at that also as an additional area. Restriction have been imposed on use of amount available in electronic credit ledger while wide rule 86B of CGST rules. So this is only for people who are having huge credits and huge tax payable. So there are certain people wherein government never gets government will never be able to make them pay the taxes What they do is that they'll keep taking credit. Government is always skeptical. Why this fellow never pays? It's a lot of people, okay? Especially it happens in contract. All these works contractor, what they do is that they'll take fake bills, fake bills, fake bills. They'll just buy something, buy something. So always, whatever is their, outward tax liability, they'll get the credits according to that. This was happening for a very long time. The government said, certain people, I'll not allow you to always enjoy the credit. So what I'll do, I'll give you 99% of the credit. 1% you pay in cash. I want you to pay something to the government. Are you always taking credit? I don't even know whether this is a correct credit or not. But there are certain exception to it. Like say, if you have paid some taxes in income tax or GST or some refund has come, something has happened in the last few period, then I will not allow ask you to do that. So now let's look at the provision here. What is it? What is the 86? If you don't comply with 86B, they'll cancel your registration. Okay. So applicability is when your taxable supply, again, look at the wordings, when your taxable supply other than exempt and zero rated supply in a month is more than 50 lakhs, your monthly taxable supply. So if you analyze your 18 percentage average tax rate also, you're somebody who's having a taxable supply in a month about more than 50 lakhs. Say you are having a 1 crore worth outward supply taxable. So government is expecting you to pay around 18 lakhs of GST. What happens? You take full credit. Now always you have credit of 18 lakhs and above. Government say that I'll restrict. If your taxable value of supply in a month is above 50 lakhs, I'll allow you to take only 99% of your outward tax liability as credit. 1% of liability to be paid in cash. If you're somebody who never pays in cash. But there are exception which says that if you have paid, okay, so if you have made payment of more than 1 lakh income tax in last 2 years. So last year and last to last year, you have paid 1 lakh of income tax. So you're somebody who pays some taxes, not always finds ways to evade taxes or take credits. If you paid 1 lakh plus 1 lakh in last 2 years, then you don't have to comply with 86. You can always take full credit. This is look at it. Like I have full credit in my electronic credit ledger. I have genuinely made a purchase. But the government is saying that no, I'll not allow you to take credit. 1% you pay in cash. 99% you take credit. I want you to pay something. But if you have somebody, why would you have a lot of credit? Say, for example, you're somebody who's having a lot of export. That's why you have large credit available with you. There's a lot of zero rated supply. Some taxable supply is also there. So if you're somebody who's always having in this kind of scenario, if you're somebody who has received more than 1 lakh in refund in last year, so monthly refund that you're taking, you have got 1 lakh refund. So the next year it's okay. You don't have to take this 99% of the output tax liability. You can take full 100% of the credit. Or say for example, in the month of September, your monthly outward tax liability or monthly turnover is monthly taxable supply is more than 50 lakhs. But if you add from April to September, in the last few months you have paid a lot of taxes. In this month alone, you have a lot of credit. You have made a lot of purchases. So if you cumulatively in an year from April onwards, if you compute in cumulatively, if you have if you are somebody who has paid more than 1% of your liability in cash, then okay, you don't have to restrict your credit to 99%. There are people like government, public sector undertakings, local authority, and statutory body also who need not comply with this rule 86B. So these are the provision that we have in 86B. I thought I'll give you a quick roundabout since there's a question like that in here. So that answer, you have all of them being listed there. Payment of income tax more than 1 lakh, refund more than 1 lakh, you have paid cumulatively 1%, your government, PSU, local authority or statutory. Third one you want me to explain once again, I'll explain it once again. Say, suppose your April onwards, your liability you're computing. Okay, say 40 lakhs, May, June, 30 lakhs, 60 lakhs. So in June, you are not eligible for credit. ITC, your outward tax liability, suppose is 8 lakhs, 4 lakhs. Credit is 1 lakh, okay, 1 lakh. In June, your liability is 10 lakhs. Your credit is 12 lakhs. But look at it, your taxable supply is more than 50 lakhs. So in June, can you take full credit? No, you're supposed to take only 99% of the outward tax liability as credit. Your outward tax liability is 10 lakh. 99% means how much? 1%, which is 10,000 has to be paid in cash. Now here, whether you will be paying 10% in cash? No. Requirement, reason, if you look at cumulatively, what's your total liability? 8 plus 4 plus 12 plus 22 lakhs. In 22 lakhs, how much you have totally paid in cash? You've already paid 10 lakhs in cash. So in 22 lakhs, if you have paid cumulatively 22,000 or more, then you've already paid in cumulatively, you've already paid more than 1% in cash. So you don't have to comply with that provision in this particular month. You can take full credit. That's what they're saying. Cumulatively in a year, if you have complied, then that month you don't have to comply with it. I hope this is clear. By cash ledger. You have paid by cash ledger. So let's move to the next RTP.